record, please. Okay, I'm going to get rid of that. I should be sharing my screen. I am. I'm going to come back over here to Cengage. So we just finished that problem. Now we're going to go to chapter 8. Chapter 8, question 5. I like how you said that. So I had to repeat it like that because I am. Okay, let's find out which one you guys are looking at. Okay, so I'm going to open up another sheet here because I have a feeling that, is there anything other than journaling? No. Okay. We sell and install home business security systems. Okay, never, ever, ever loan money to anybody. I don't know who this person is, but you know, don't do it. Okay, so my general journal, we're gonna go ahead and plug that up here, bring that down. Okay, good. So January 1st, we loaned money to Trina Galhals, or whatever her name is. Okay, so this is going to be a notes receivable. Let's check our chart of accounts. Okay, they have it as accounts receivable. There we go. Is it January 3rd? Okay. Does it really matter? No, I'm teasing. Oh, I'm such a snot. Okay, out the door went my cash. I wonder if AWC will loan me money. No, they will not. I'm going to put in my amounts here. 18,000. Let me double check then. Yeah, they do have a notes receivable, but this one's very specific, and I have no problem using this one because it's 90 days, so it will be paid within 90 days. So right now, I'm going to make a note.
I'll show you what I have.
You sure can.
I don't know. It's telling me. I don't know what to do really.
It's saying notes receivable. Are they being sneaky?
I don't know what to do here because that's the only one I got wrong.
Oh, cash.
Just change it to cash.
Yeah.
Okay.
Okay, so I'm being told do not do this, that the notes receivable is correct. Okay. I was going to use the other one. Okay, but we still know it's Tina somebody. Okay, so I'm just going to write Tina. Okay, so we know it's 18,000. There's my principal. And how much am I going to charge her? 8%, 90 days. Okay, so how much am I going to, and I'm just making note of this. How much am I going to earn in 90 days? Well, I'm going to go 18,000 times the 8% times 90 divided by 360, banker's rule. And so she's going to owe me $360. Okay, at the end of 90 days. Well, we know that this was on, so I'm going to put principal, interest, term, interest, revenue, and this is my due date. Wait, issue date, due date. So I'm a little sloppy on this, but that's okay. 1/3, and then what I'm going to do up here is I'm going to go 1/3 plus 90 days. Enjoy, Seamus.
Thank you.
You're welcome. So my due date is going to be April 3rd. My maturity value is going to be the 18,000 plus the 360. So there we go. So we know that's Tina. Okay, now I made it pretty. Okay, so we have her done. So let's go to the instructions. February 10th, we sold merchandise on account to Bradford and Company for 24,000. Cost of goods sold was 14,400. So we're using perpetual. Okay, so 24,000. I'm plugging my numbers. I know I'm plugging my numbers in before I should, but it's just because I don't want to forget. Okay. Okay, here we go. This is going to be easy. This is going to be my sales. This is going to be my cost of goods sold. This is going to be my merchandise. My inventory. Okay. I'm going to go ahead and mark this up. Accounts receivable, I'm just going to put Bradford. So right now he's just some normal dude. That owes us 24,000. Okay, good. My instructions. Wow, oh my goodness, this is pathetic. What you guys make me do the hard ones. Okay, so we got Dry Creek. 60,000, cost of goods sold was 54,000, and that's on the 13th. And I'm sorry, but who's going to give themselves that little a profit? There must be something. Because that's really, I mean, if I look at that, okay, I'm going to do something real fast. I take 54,000 divided by 60,000. They're only getting 9% gross profit. And then after that, that $6,000 they're going to earn for gross profit, they have to pay all their operating expenses out of. That's not a very good gross profit. Just FYI. Okay. And who was that? That was Dry Creek. Now, is it helping you guys to see me do my little T accounts? I hope.
It shows kind of the process. Because, yes, that's, we did it earlier for peanuts with reference to factor. The reference to April 3rd is what I stuff.
Okay. So it's going to be cost of goods sold. And this is going to be my inventory. Okay. So let's see what's next. March 12th, accepted a 60-day 7% note from Bradford. Okay, Bradford, you are not cool. If you have a customer who does this too much, don't extend them credit anymore. So I'm gonna have to, I need to go back in here, and so I've got this Bradford going on, so I'm gonna grab this information here because we're converting it. So we need to go ahead and mark it up. My principal is going to be 24,000. My interest is going to be something. 7%, 60 days.
I had that debate where enter any answers.
Oh, yeah. Okay, why is that happening? Because I had it happen too. And I was like flipping out, but it happened to me in Excel. And it was for some reason, I had something open someplace else in my computer. And make sure you save. And I had to exit out of something. So if you've got another application open that you've been entering in data, close that app. Okay.
There's grading, failure, render, withdraw failure, 5,000, marking, timeout, completion, read timeout, and this.
So basically you lost your internet connection.
Yes, it's fine, but that, if I go back, it's keeps that little label. And then I haven't checked chapter 5, I believe I told you all was.
Okay, what I want you to do is I want you to do a print screen. And I want you to send that, and then when you go back in, I want you to send that to Cengage now. Okay, so my interest revenue is going to be 24,000 times 7% times 60 divided by 360, 280. My issue date is, fortunately for you, I'm doing this on, you can watch the video. Okay, March 12th. Okay, 60 days. May 11th, the maturity value will be. Aha, isn't that nice? Okay, so this is a really nice, easy way just for you guys to keep track of this. Okay, so I've got that part done. So what are we doing? What else are we doing? March 14th. Okay, Dry Creek's being a bad boy too. They're going to be doing a 9%. Okay, so March 14th. Now, in the real world, I'm going to tell you that you would have these notes receivable separated. You would have the names in there as well. Okay, that's in the real world. But you know, we're not in the real world. We're in Cengage world. I like that. I'm gonna say that all the time now. Okay, so again, I'm gonna come back over here. Here's my Dry Creek. I'm going to grab this information and paste, double check my interest rate. Okay, 9%. Percent term, I believe, is 60 days. Yep. Principal times interest times your term divided by 360. Banker's rule. Issuance was 3/14. Come up here, grab that. And my maturity value will be 60,000 plus the 900. Okay. So there we go. So when we're set and ready for everything to happen. Okay. Okay, so Tina was very bad. Tina paid us our interest. Okay, here we go. On 4/3, Tina's coming in and she's going to give me my interest revenue. So I'm going to get some cash. Well, how much cash am I getting? I'm going to get $360 because I see it right there. And that's going to be my interest revenue. Now, this is going to be really dorky because they said in the instructions, record both the debit and the credit to notes receivable. So here we go. believe it was 24,000, wasn't it? Nope, 18,000. I was gonna add on 6,000 just for the hell of it. Okay, so there we go. Now, what I'm gonna do is, I'm gonna go ahead. So now we've extended this note. It's gonna be 120 at 9 days. At 9%, excuse me. So I'm gonna grab this again. I'm gonna copy and put down here. And interest is going to be at 9%. I would have charged her more than that. Check, make sure I'm true and correct. Yep, 120 days. Okay, my interest times my principal times my term divided by 360. My issuance date was April 3rd. That's just around the corner, guys. So if you see this chick running around, you know what? Don't loan her any money, okay, guys? 18,000 plus 540. Okay, that'll be my maturity value. Okay, so you can kind of see what's going on here. Beautiful, I love it. Okay. Oh, we're almost done. 712. Oh my gosh. Blah, blah, blah. Okay, May 11th. Dry Creek is going to dishonor their note. Okay, so May 11th, Bradford and Company, we get some cash from them. Notes receivable. My interest revenue. Okay, and so that was Dry Creek. Okay. Or was it Bradford? Nope, it was Bradford. Okay. Okay, so let's go back to Bradford. What do we get? We got $280, 24,000. Okay. On May 13th, May 13th, they have dishonored their note. So we're going to go ahead and put that up into, this is where it should go. So we'll see what happens. That is Dry Creek. Notice that I'm including everything they owe me. That interest that they didn't pay because they dishonored their note. Do not extend them credit anymore, whatever you do. Okay, May 13th, got that. July 12th, oh, good for them. Okay, so Dry Creek is going to pay us on 7/12. And they're going to pay us everything. So I'm going to go ahead and come in here and I'm going to grab this information. And my principal is now going to be 60,900. My interest, because according to the contract, says that if you don't pay, now you're going to pay 12%. How many days was that out? That was out 60 days. Principal times interest times term. 360, the banker's rule. The due date. Okay, there we go, 62118. They have July 12th as well? Okay, good. Okay, that's everything they owe me. This is going to be my accounts receivable from the dry people. And that's going to be 60,900. And the other portion is going to be my interest revenue. And I'm going to jump over here just because I want to see real fast, 1218. Okay, is that correct? 62,118. Okay. Okay. I just wanted to double check my math, make sure I was true and correct to the best of my knowledge. August 1st, Trina paid her bill. I don't know what I just did there. Yeah, there's some issues. I'm noticing I'm having to tab instead of just entering. Okay, so Trina, what are you doing up here, Trina? Trina was in notes. Where are you, sweetheart? That's right. She went from notes to notes. Okay, 18,000. So we're going to get 18,540. That's notes receivable. Nope, sorry. That's cash. That's going to be 18,000. And this puppy is going to be our interest receivable. You know, I was really angry when I got here. Because I had a stupid dream about my husband. Have you ever had those where you have these dreams about your friends or significant others and they do something bad in your dreams, like leave you at the fair and they abandon you to walk home?
If I'm mad, I wake up sad. Like even if I'm mad,
Oh.
I'm so upset. I just end up getting sad, and I'm just like, not even because like what happened is like, oh, I felt bad feeling. And then I tell him, and he's like, why did you bring it? You know, like,
No, I call my husband and I'm mad at you. He's like, what did I do now? And I'm like, well, in my dream, and he just laughs now. Okay, so we got Halloran, but I'm telling you, I hate those dreams.
so sad.
I'm sorry.
Oh, my cousin.
Oh, no, I don't hate my husband.
What did he do on the cheated on
No, he left me. He abandoned me at the fairgrounds.
Out here.
you? Why? Like why did he?
I don't know. I had to walk home though, and I live in the foothills, so
He ain't.
I would be upset too.
yeah. Okay, so we got them for 13,500. Oh. So they're doing a discount. So actually it's going to look like this. I'm going to go 13,500. I'm going to go plus times 0.02. Minus that 13,230. That's what that means. Take that discount off right off the bat. When they say net, gross is when you leave it on and then you record the discount. When they, if they take the discount. Okay, so this is going to be cost of goods sold. So there's two difference. I do have a video on that. My instructions, what was my 8,100? And this is going to be 8,100. This is my inventory. Okay. Why did they give me? Yeah, they didn't tell me if I'm right or wrong. I'm not liking this. We're gonna receive cash in the amount of 13,230. Yeah, I'm gonna try something to see if this is true and correct. I know I screwed up here for a sec. Give me a second. I'll get that A in there. Let me see if they're doing something that they're not supposed to be doing. Why am I off in my own little world? Let's find out what's part's wrong. Oh, interest revenue. Sorry, guys. Okay, that's interest revenue. Okay, I knew this one was going to be wrong. This is messed up. Bless you. And this is messed up.
So there should be two October 15th.
Shoot. Hang on. Yeah, there should be two of those. Okay, what do they have in here? Okay. You don't trust me anymore, do you? I wouldn't either. It's okay, that one's okay. So I'm gonna get cash. Wonder if they're trying to be tricky. Yep. Nope, it's telling me I'm still wrong. Okay, hang on just a sec. Okay, so let's pretend this. Let's see if this is gonna fix. It was at 82. Why am I at 81? I'm doing both methods, what I'm doing, trying to get this to go right. Okay, 270. Now check. Nope. Okay, I was right the first time. Yeah, because they have an extra space in here, and I'm like, why is there an extra space? So we're going to, no, everything's fine. Except for this last one, and I'm going to wonder what they're doing.
For me, when
I'm missing something, one thing, and I don't know where it's at.
so I was doing it, because it's doing it right now, and for some reason it's telling me February 10th.
Mm-hmm.
This is- but it's-
Okay, yours is February 10th. Yeah, my February is fine. Cause it will give you the little pink. So was that 24,000? I don't have anything in reference to that. October 5th. Net of the 2% cost of goods sold. That is just odd. Really odd. I'm sorry, guys. That's just odd. Okay, so I'm gonna be sneaky because why not? That's how I roll. We're gonna look at the answer key because I want to see what they're saying we're doing wrong. What problem was that 5?
5.
Okay. Okay, that was right. My 13,230. So, okay.
Yeah, it was February 10, you have 4 lines. Only 2.
No, I should have 4.
Or I think it's like,
Notes receivable. Look at what I did. Okay, so I know what I did. What the book is calling wrong. I recorded my interest receivable and my cash. And I put that in one journal item. And then I put my 2 notes receivables together. That's right here, this April 3rd. I did mine differently, same amounts, just, oh my gosh, it's 1:15. I know, when I'm having fun. Okay, hey, at least I got this done for you guys, okay?
So will this be posted today?
Well, you have the rest of the answers. It's on video. Okay. On Thursday, I am going to be lecturing. I'm going to be lecturing till the cows come home. Actually, it's a very easy lecture. I have quite a few of worksheets in the Canvas already to help you with those problems. So don't worry about it. It's not a hard chapter. Yes, I'm going to be posting. Check my YouTube channel first. Yeah, in fact, I'm going to turn this off right now so I can send up that